Hi, I'm Lindsay Chamberlain, Managing Director of Client Service and Marketing at Axiom Investors. Today I'm joined by Andrew Jacobson, Axiom's founder, Chief Investment Officer, and Portfolio Manager. Axiom Investors is a client-aligned, performance-driven global investment partnership.
For over 20 years, we've successfully implemented our ahead-of-the-curve dynamic growth investment philosophy and process on behalf of our sophisticated global client base.
Andrew, when you think about Axiom as an organization, what do you believe are the key elements that have really contributed to Axiom's success over the past 20 years?
Sure, Lindsay. I think there are really three key elements. First and foremost is our consistent firm-wide investment philosophy and process that's allowed us to deliver net of fee outperformance since inception across all of our strategies on behalf of our clients. Second is our partnership structure, which allows us to attract and retain really outstanding professionals. For instance, our portfolio managers have over 25 years of experience in their respective asset classes, and our sector analysts have over 20 years of experience providing thought leadership in their sectors of responsibility. The teams are stable, on average collaborating for over a decade, leading the strategies successfully through different market cycles. Finally, third, I think that our culture of excellence and client alignment has really ensured that the entire organization stays focused on client outcomes. One way to further reinforce that culture of excellence and client alignment is we all invest and reinvest alongside our clients in order to stay focused on their long-term objectives.
Andrew, let's go back to your comments on Axiom's consistent philosophy and process. What fundamental beliefs really underpin that philosophy for Axiom that's proven successful for your clients over the past 20 years?
Well, Lindsay, Axiom is committed to identifying and investing ahead of the curve in innovative businesses around the world. In order to achieve that investment mission, we really seek three consistent attributes in our investments. First and foremost, we want to invest when the companies are going through a period of fundamental operational change and improvement, because those changes and improvements can drive underappreciated, undiscounted future earnings and cash flows. And by taking a forward-looking view of those operational inflections, we can invest ahead of the curve on behalf of our clients. Second, we want those positive changes to be occurring on top of an already attractive and sustainable enterprise. And we take a holistic view of sustainability, including both the financial and the ESG non-financial attributes of sustainability, because the compounding of earnings is also a tailwind to returns on behalf of our clients. It means time is on our client's side. Finally, we look for a reasonable and attractive valuation in our investments, both as a way of controlling and mitigating any potential downside risk during moments of market stress, as well as a way of ensuring the upside potential of the investment. By combining those three alpha factors, positive change, sustainability, and valuation, into a consistent implementation and process, we really compound and magnify the benefits of each of the individual elements.
Andrew, how do you ensure that this dynamic growth investment philosophy is implemented in a sustainable way and in a repeatable way through time?
Yeah, well, one thing that I think our clients really do appreciate is the transparency and repeatability of our four-step investment process. One of the ways we sustain that consistency through time is our use of the Actuary Research Database. It's a proprietary fundamental database that's really sustained by the entire investment team, where we're scoring and ranking forward-looking data, both microeconomic and macroeconomic, in order to ensure that we remain fact-based and objective in our investment decision-making and avoid some of the behavioral traps of anchoring, confirmation bias, and groupthink, and so on. So that's an important tool. And then I think that the continuous monitoring and reconfirmation of the investment philosophy is another differentiating element, because that helps us to really manage risks through time.
Andrew, one thing that I think really resonates with our clients is our disciplined approach to portfolio construction. Can you talk a little bit more about the role portfolio construction plays in Axiom's investment philosophy and process?
The foundation of portfolio construction at Axiom is our proprietary risk and return framework that we really implement across the entire organization that allows us to deliver consistent attributes across all strategies. Let's take a look at that together. As you can see, we scored the risk attributes A through E on the horizontal axis. And those risk scores are based on a constellation of underlying features, including enterprise characteristics, financial attributes, ESG characteristics, and even statistical features. The least risky stocks are scored A, and then progressively out to E, you have the more risky holdings. On the other axis, 0 to 3 is our dynamism score, which is based on our 3 elements: positive change, sustainability, and valuation. The most compelling stocks are scored 3. The most attractive overall stocks are as close as possible to that A3 box in the upper left-hand corner of the matrix. Those are the least risky, most dynamic potential holdings.
How do the portfolio management teams then use these risk and return ratings to populate their portfolios?
Well, these risk and return scores become the basis for security recommendations, with the most attractive, least risky stocks being proposed for inclusion in any of the strategies for which they would be appropriate. The portfolio teams, who have over 25 years of experience in their respective asset classes, then construct portfolios that ensure diversified sources of alpha so that portfolios are resilient in different kinds of market environments, providing good upside capture, but equally important, attractive downside protection, contributing to the good risk-adjusted returns through different market cycles.
You've mentioned ESG a couple of times. Can you speak a little bit more about how ESG is integrated in Axiom's philosophy and process?
Axiom has a differentiated approach to ESG. We really want to invest in companies that are not only well-aligned, but where they're actually improving their ESG alignment, because that can be not only an important form of risk control, but equally a source of potential alpha. We actively engage with and work with our management teams in order to identify specific opportunities for improvement and help them communicate the changes that they're achieving in order to get recognition in the marketplace.
With Axiom having over 20 years of history investing in equity markets, when you think about the past year and a half and the COVID pandemic, can you speak a little bit about how Axiom's process has navigated that market environment and also mitigated risks along the way?
I think there are several reasons that Axiom was able to both protect on the downside during the initial phase of COVID and then really participate in the market recovery that followed that initial economic and geopolitical shock. First and foremost, I think our focus on positive change and innovative companies benefiting from significant structural tailwinds meant that our companies were fundamentally well positioned to thrive despite the challenges of COVID. Equally important, our attention to sustainability and valuation meant that the companies were resilient to the initial period of market turbulence and well positioned to recover as markets and economies stabilized. Finally, I think that our seasoned and experienced leadership teams who've managed through multiple cycles had the perspective to understand the different attributes of what was unfolding and really make appropriate adjustments to the portfolios that captured the opportunities and mitigated the risks.
After a strong year last year with performance, as we entered 2021, can you talk a little bit about what the past 6 months have been like in terms of performance, and then what your outlook for growth equities is going forward?
So, there's been a lot of interest in the market recently on some of the cyclical recovery coming out of COVID, some of the inflationary concerns that have been a result of supply chain disruptions. But really, when you step back and think about it, the structural case for growth that we laid out in our webinar last year in our 4Ds presentation, with headwinds to longer-term macroeconomic growth from demographic challenges, from debt and fiscal imbalances, from deglobalization and the regionalization of trade, and from the disruptive forces of technology, resulting in fewer and fewer companies really able to capture the available profit pools. All of those underlying structural elements have actually been reinforced as a result of the developments that unfolded during COVID, and I think really favor Axiom's dynamic growth philosophy for the medium and longer term. In terms of recent performance, we've been able to actually navigate some of the cyclical challenges, I think, effectively, because we found companies like our semiconductor holdings and some of our well-positioned consumer and industrial stocks that have really participated in the cyclical tailwinds, but now are poised for further growth because of the underlying structural growth that's inherent in their business models. So we're really excited about the opportunity to continue to identify innovative leaders around the world with a medium and longer term investment horizon.
Andrew, thank you so much for your thoughtful discussion today.
Thank you, Lindsay. It's been a pleasure.
On behalf of all of us at Axiom Investors, we look forward to partnering with you to meet your investment objectives.